Welcome to Venture in the South. These are the stories of innovation and success in the southern U.S. that make money, have fun, and do good.
Welcome back to Venture in the South, a podcast about angel investing and startups in the southeastern United States. In our episode this week, I'm your host, Paul, and I'm here with Cian Robinson from Robinson Ventures. We are going to talk a little bit about his investing activity and interests across the Southeast. So, Cian, welcome.
Hey, good morning, Paul. How are you?
I'm good. Thanks for taking the time to do this. Fun experiment with two podcast hosts on the same thing at the same time. So we'll see how that goes. Thanks for doing that. Maybe to kick things off, could you tell the Venture in the South listeners a little bit about what your background is and what brought you to investing in startups in the Southeast?
Yeah, you bet, Paul. So the joke I use is I'm a recovering CIO / senior hospital administrator, and formed Robinson Ventures. I call it 1.0 in 2002. Was very blessed to have an exit in late 2011, 2012. We were a traditional management consulting firm at that point, and we did do a little bit of poking around at angel investing or leaning into companies that we were working with where we could take a little sweat equity, but nothing formal, right? And then I outkicked my coverage 30 years ago and married a woman way smarter than me. And so I became the trailing spouse when we moved to Louisiana in 2012 for her to take her first presidency chancellorship of a community college, and spent 8 years there working for a health system called Lafayette General. And the joke is it was an executive director of innovation, research, real estate, venture, and the foundation. So it was like everything everybody else wanted to do, they put into one position, and almost, and then my boss, the CEO of the company, David Calicott, called me sort of the VP of why. Like, why are we doing this? So brought sort of like an internal consultancy. And we formed a couple of venture funds. I experienced an exit. And so fast forward to today, I reformed Robinson Ventures once all the non-competes and all that good stuff ran out. And we are split equally as, I would call us an angel, right? Even though the Ventures is in our name, we're more like an angel fund or angel investors. I wouldn't even say we're a fund because we invest off of our balance sheet. Right. And then also consulting. So we're very blessed to have some phenomenal clients in the healthcare industry around the United States where we help them think about innovation, venture, and strategy and some development. Right.
Got it. And so do you engage with companies first from the strategic and consulting angle, or are you looking for investments first and maybe tack on the other work afterwards, or both?
Yeah, it is. It's a both. It really is. And it's in the directionality is interesting. So when we're working with the clinical side of the house, so a hospital system, EMS, I'm allowed to say, I work with Acadian companies. They're one of the largest privately held EMS services companies. And I work with them on innovation and investing. I'm looking at it from their lens, right? Would we think about a company and bring them into the ecosystem there? And it's we'll invest in you if we use you type of thing. Is it solving a problem? In my hospital system clients, it's very much how do we set up internal corporate venture capital and think through that? And then how do we ingest, if they're not developing their own IP, how do we ingest outside in companies, right? Or if they're developing their own IP, how do we get that IP out into new codes, bridge the valley of death through gap funding and get them out into the world, right? And then Robinson Ventures gets to see these companies, they come to us, right? Much like they come to y'all, right? In Venture South, they're like, hey, I need some funding, And so when we like them, we'll take a run at them, and we'll invest on our own. That said, I absolutely love investing alongside and with Venture South because of the rigor of your due diligence process, which matches up with ours. And if we can combine that together, it makes a lot of sense. And so I think Paul, I both invested as a member through Venture South into companies, as well as there's been a few times where you all have done the due diligence. There wasn't enough member interest, but you still handle the investment on my behalf, which was, it's an easy button almost. Like I don't have to think about that on my side anymore. But would I have done something on my own? Probably, but you guys provided the easy button and I'm paying my membership dues. Might as well. Right.
Yeah.
So
good. Well, good. That's a lot of different sort of strands of investing and activity there that you covered, or you weaved together well. Maybe just to pull on a couple of those threads. So on the Robinson Ventures side, what kind of investment thesis do you have on that piece, absent working with a big health system or something else that has their needs or thesis? How do you figure out what deals you want to spend some time on the Robinson Ventures side?
So, Paul, I would say so everybody understands, we play in the pre-seed and seed, right? Heading towards Series A, and we'll come along. When we're investing in pre-seed and seed, our thesis is we're very much evaluating the jockeys in that instance, the people who've come up. They have to be very passionate about the problem they're solving and subject matter experts, to me, in that area. They don't necessarily have to have product market fit quite yet. We can sometimes lean in and help with that. The majority of my investing is really in two areas, right? I'm a recovering CIO in healthcare, and I love data, so I stay in that lane. So to me, you invest in what you know, right? And so you look at my portfolio companies, there you go, right? And then the other side is, and I got into it, is multi-sided marketplaces. I have no idea why I did that. It sort of naturally happened. But if you look at my portfolio, I've got a laundry multi-sided marketplace, a sneaker multi-sided marketplace, it's like, what? He does healthcare and that, right? Okay, that doesn't make sense. But I love the way when a multi-sided marketplace finds its product market fit, it spins very fast, very quickly, and is the multiple on invested capital, the IRR, it's really tight and reasonable, right? And then there's also the epic when they don't, like it's crash fast, burn.
Okay, got it. Well, I mean, it makes sense to be diversified, so I get that. It also makes sense to invest in things so I get that too. Sometimes those things can't happen at the same time, so you have to do a bit of both.
That's right.
So that makes a lot of sense. Just in terms of spread of your portfolio, in terms of geography and number of companies, how mature is your portfolio from a size and perspective?
Yeah, so I would say, I'm trying to think through, we probably have half a dozen companies all over the US, right? We do have a little bit of a concentration in the Southeast. I think that occurred organically working with y'all. And I've spent the last, I don't know, probably almost 20 years in between Virginia and Louisiana and South Carolina now, right? So, and then the other thing, Paul, is I like working with first-time non-traditional founders. So if you look at our portfolio company, we have some great people, and I think that's because I can lean in, right, and provide some additional experience.
Okay, so is it sort of an active mandate to invest in first-time non-traditional founders, or again, was that more serendipitous, or was it sort of an active decision to do that?
It was an active decision.
Yeah. Okay.
And what I found is that they tend to have a lot more grit and hustle, and that grit and hustle translates to better returns.
Yeah. We have certainly experienced similar things with a couple of memorable venture South investments where young founders, fresh out of school, or weren't able to raise capital from traditional capital sources, just work very hard to to deal with the chip on their shoulder sometimes, or just have the hustle and the energy to go do it. So that's great. And so what kind of help do you, obviously you got a deep industry background in healthcare and administrations. Do you bring that as the main thing you bring to help, or what other things do you bring to help those founders?
Yeah, so we will lean in on my favorite is you get in there and they've raised a bunch of capital and they're ready to go. And then you look at what they're going to plan for their burn rate and you're like, yeah, no, right. We need to skinny that up. So we bring that sort of discipline and financial acumen. We'll also help with strategy and development. So as they're thinking about how they're going to go to market or how they're going to roll out additional products or services or their existing product and service set, we'll help with that. And then on the development side, because we're connected, right? People will take meetings. And so we're able to at least have these. And the folks that I'm going to know what I do for a living now. I'm a former them usually, right? In a hospital system, if we're going that direction, Paul. And so they'll take the meeting at least to say, hey, what cool you're working on. And let's see if there's something that they can lean in on. And I would say if I do that 10 times, it's going to be 8 no's, a maybe and a yes, right? But they love like learning about what's out there, right? They'll at least take the meeting.
Okay, got it. Yeah, so connecting the startups who are not well connected using your network is a great synergistic benefit.
And then I love bringing deals to like the networks, right? So I'm not a broker dealer. I don't carry a Series 6 or Series 7, right? Never act as that. What I love doing as a member of Venture South is if I've gone into something, they are in the Southeast, right? Or ish, like I'm trying to like, okay, they are proximal. Maybe we can work them in. I love to bring them into, Venture South and sit there and say, hey, why don't we take a run at them and take a peek at them and stuff like that. So we'll also tell them how to, if you've gotten some additional founders, friends, and family money in, and you're working your way in that pre-seed, like how do you navigate the angel networks? How do you navigate those early investors? And so we'll work with them strategically there.
Okay, got it. So how big a team is the Robinson Ventures team at this point?
Tiny, man. Like we're the small but mighty, I guess, as you say. So there's myself, my project manager, Kelsey Gibbons, who's like the joke we use is the project she manages is me, right? Is the bitch. She's awesome. And then we have a program that we work with you. We have a venture fellowship at Coker University, and Robinson Ventures covers the cost of Coker being an affiliate member, right? And so through that relationship, I'm able to bring in these students, and Kelsey was one of them. It was a brilliant, like she moved from being a fellow all the way into a project manager. And then we've got other support folks, right? So if you look at our website, you'll see all these venture fellows that went through and they've all graduated, gotten jobs, or gone on to masters, right? So we lean on them. We have Dan, and he is our like social media podcast producer, website person. And then we have some fractional people. So we just had Joanna Dutton join us part-time. Joanna comes out of the Cone Health Ventures, Hatteras Venture Partners, right? And so Joanna's joining us part-time. We've grown. So, we're tiny. We're like, if you roll all the FTEs up, we're like 4.
Yeah, okay. Part of the genesis of this episode was we're trying to interview individuals that do stuff outside of Venture South, not just people who've all bought into the Venture South messaging. So I'm curious to explore about how people actually do that, whether it's totally on their own or whether sort of in your case, you have not a big organization, but an organization around it to help spread the load and bring in different viewpoints and do the work. So
yes.
Interested to hear more about
how that's why Kelsey joined. I mean, she knew how to do due diligence from being in the venture fellowship program. And so I'm like, good, now you know how to do due diligence. As these companies are coming our way, you're going to take the first crack at it, right? And she runs the process, right? And then I brought in Joanna to increase that capacity, right? Not only for ourselves, but many of our clients we're working with these corporate venture capital funds, they're like, hey, while we're building our own internal capacity, can you run some stuff for us? And we're like, sure, absolutely. Right. Let's get that done. So, but yes, I can't do it all by myself, Paul. That's for sure.
Right. No, building a team is probably the most important skill set of anybody. Yes. I definitely hear that. So just to go back to the sort of corporate venture capital work you do then with those other larger systems, can you tell us a bit more about sort of what you do for them? If you obviously don't need to share names specifically unless you want to, but just sort of how you work with aspiring corporate venture kind of efforts.
Yeah. So it's first understanding why they want to do it, right? Let's just get to the basics, right? It's like, what made you think about, hey, I need a CVC function? And with these health systems, some of it's FOMO. It's kind of crazy. It's like the fear of missing out, right? I've seen all these other health systems do it. Why aren't we doing it? So they bring us in to explore that, right? Some of it has been, we've been doing this sort of, right? And we have a little skunkworks team that's out there with the solutions that they're looking at. So they want to make it more formalized. And so what we do is we coalesce a lot of that information to sit there and say, okay, I understand why you want to do this, what you want to do with it. Then we begin to develop the investment thesis. And we think about, is this outside in only function, meaning they don't have their own intellectual property. They want to solve some problems. They're seeing these younger companies come to them. They really like them. And then they want to they want to invest and use, right? So, right, it's an outside in only. And then in some instances, they are either the university themselves, or they have a really good relationship with the university. And so they're jointly developing intellectual property. And then how do you navigate getting that IP out and into the new co, right? And traditional university tech transfer is based on licensure. Like, how do you license? How do you license? How do you license? And the number one way you license stuff is you create the new co yourself to license it into. And then you have a gap fund that invests in that new co. You bring others along with them, like a Venture South, if they ride alongside, right? And now all of a sudden that internal CVC function that's investing in the IP and the company gets 2 bites at the apple, which means they're getting licensure revenue and they're getting, should that company do really well, they're getting that exit and or dividend. So it's a lot of fun, Paul. I mean, getting in there and having them understand what they're doing, right? And really think through it and then coalesce it together. And then they do their first deal and you just see them do their first deal. And then they become almost addicted is the bad word, I would say. We're going to do the next one. We're going to do the next one. We're going to do the next one. So.
Okay, interesting. So yeah, it's not just the sort of strategic thinking about this is something we want to do and why, but actually helping them do it. That's an interesting sort of tactic.
Systems are so huge, Paul, and they have so many coming at them with these opportunities. And they know when they go with a younger company that's maybe raising some money that they're missing out on it. And they're generating revenue for that company and they're getting a great partner out of it, but they're also missing that piece out. So this is an opportunity for them to take advantage of. We're investing in, we're using you and we're a great client. And now we're also investing in you. And then that lends credibility to that new co or that company that's coming in and receiving that investment. If you get an investment from a fairly large, sizable hospital systems venture capital function, there's other hospital systems that are like, wait, what's going on over there? What happened with that? And so it gets you in the door more. Yeah.
Yeah. Right. Yeah. Okay. Got it. That's very interesting. So is there any case studies or systems that you would point to and say they've done a good job or we've helped them do a good job or any sort of tangible examples you could share?
Yeah. So let me noodle on that a little bit, right? So when we started our first venture fund, when I was in Louisiana back in 2014, I think there were 7 hospital systems across the nation. And there were these guys down the bayou in Louisiana. Everybody's like, what is going on down there? And we were a tiny fund, right? But it was like the OGs are like Providence, right? And they just spun out Illumia, right? Which is they're now going to be there for, external. It was internal, now it's external, formal. We're raising a X hundreds of millions of dollars fund, right? And so I would tap on Providence. I'm proud of what we did down at Lafayette General, which is now part of Auctioner, and there's Auctioner Ventures. So got to call out my people down there. They've different thesis than what we had when we were at Lafayette General, but an interesting function nonetheless. OSF has done a nice job. And then I would say in the state in South Carolina, up and comer, and that they're going at it hard is MUSC, Medical University of South Carolina. And what I like about what they're doing there is they'll be able to go from IP, pre-seed, new co, all the way through and to Series A and beyond, both internally and then with their shared partners that they have. And so there's going to be some really fun announcements, I think, over the next, in 2025 at least, about stuff that they're doing down there. And they're connecting it smartly to investing in Charleston and the innovation ecosystem that's going on in Charleston. And so Charleston's already blowing and going. I think it's going to be spun even harder when you see what MUSC is about to do.
Okay, great. We'll stand by to see what the public results are of that. That sounds intriguing.
Yeah.
Okay. So back onto your investment decision making. I guess ultimately the decision is made by you whether you invest or not. How do you make those decisions?
So it's a combination of doing the due diligence and conducting the analysis. And I hate to say this, Paul, but there's also a little bit of a gut feel to it, right? And it's a belief in those. I come back to when you're in pre-seed and seed, you're very much investing in the jockeys and the founders and the people who are doing it, right? And so to me, I'm a relationship kind of guy. And so it's like, what kind of relationship can I develop with these folks? And are they going to allow me to lean in and help? So there's 100% due diligence. Like, don't get me wrong. If it comes out the other side that we've run them through a background check and there's something in the background, we're done, right? Whoop, that's done.
Yeah.
But, it then comes down to, okay, that's sorted out. We sussed it out. Seems solid, reasonable, passes the test. Okay, now it's, to me, the relationship is the final check.
Okay. Interesting. I don't know why you were reluctant to confess the gut part. I mean, that's a critical piece of investing. You've got to like the idea to spend all this time doing it, and you've got to want to work with the entrepreneur for potentially quite a long time. So those are not things that are easy to scientifically evaluate.
Yeah, my portfolio is tiny compared to what Venture South has done, right? And you guys have got to work with all of those folks in there. And I love when I get my, what I call it, the report is, it's diving, surviving, thriving, or striving and thriving, like the 4, right? And so I love to get that report, and I go to my portfolio companies, I look for them, and I'm like, oh,
yeah, right.
they're in the surviving diving mode. Oh no. Or like, we just had recently one go from like surviving diving to like exit, right?
Yeah.
And they went immediately to thriving, and then they immediately went out the door, and I was like, okay. So,
Yeah. There's a lot of guesswork, and things change fast in startups. So,
good Lord, yes.
Things can move around a bit. Yeah. Yeah, we do try to, at the very least, be as transparent as we can about how the companies seem to be doing, what they're telling us at least, but then things can change very quickly to the good or the bad. So it's rarer that things suddenly do well and there's a good exit, but those do come along as well. So that's good. I don't know if you can talk about any of the investments that you have made or want to talk about them, but maybe you share a highlight from the Robinson Ventures radio list, maybe of companies that you have been working with that are, interesting.
Yeah, well, the one we were just talking about, sort of not naming them, but which was biospatial, which to me at one point in time, they're in the EMS space, right? And they have EMS data, so I knew that, right? So I invested in what I knew.
Yep.
And then they were doing great until all of a sudden they hit a bump in the road, which is they lost a couple of big contracts, which gave us all great pause to say, okay, well, again, you come back around to what are the founders in that team going to do? And they rallied, right? They replaced that revenue, not so much so that they got into an acquisition, right? And so this is public knowledge that they were acquired and exited. And was it a like X to 15X multiple on capital? No. Was it a decent multiple on capital? It passed my bar. And was the IRR reasonable? Yeah, it passed my bar too. So am I going to the Bahamas to retire? No, right? And are we? No, right? But it was good. It was a good, solid, and Paul, we talk about the rule of 10, right? 4 go, toes up, 3 break even, 2 are like this, solid. And then 1 is like, yes, right? And so we're always looking at that. So I would say, biospatial, just because they recently exited at the end of 2024, is top of mind.
Yeah. It's nice to celebrate those wins, even if they aren't retirement level wins. They're all good wins.
Also had we had 2 portfolio companies not make it at the end of 2024, right? And so we were part of their ramp down process, and heck, it was an asset sale, right? And so you also have to go through those ugly things, and knowing because of where you're in what position, even if you got pref, you're at the bottom of the food chain with anything that sorts out in terms of money, right?
Yeah. The theoretical waterfalls are nice, but the human dynamics of exits are much more challenging and complicated than the documents always make it seem. So yeah, those can be tough to work through, but it's part of the business, right? You're going to have some losses along the way.
Yeah, absolutely.
Yeah. Okay. So I'm still interested in exploring the things that you do outside of being part of the Venture South sort of infrastructure. I don't want this to be just a cheerleading show for Venture South. So I'm interested in learning what you think you do better than Venture South, maybe, or what just the flexibility of being you as an individual you can do that isn't easy to get through a sort of formal angel group kind of structure.
Yeah. So your structure is when I say methodical structure, right? It takes time to go through the process, right? And sometimes that process can take months, right? Whereas I can go a little bit faster, right? And so if I've done my due diligence, I like it, I can make that decision immediately, right? So I think there's just sort of that speed at which we operate. And it makes sense. Like there's 4 FTEs like total with us, and you have 500, 600 members, right? And you have to go through that sorting process, right? And so I think it's just speed at which we go. I think our subject matter expertise allows us to make those decisions a little bit faster sometimes. We have to coalesce at Venture South subject matter experts from within the membership. And then they've got, I mean, poor Alex is like herding cats constantly to have this happen, right? I'm one of them, I like raise my hand, right? So I think it's speed, Paul. Our checks are smaller. Your checks can be larger, right? I like when my checks are small, and if it's going through Venture South, there's some great sort of synergies there. And we're very focused, right? So multi-sided marketplaces in digital health. You guys see everything. So big differences is I stay in my lane. And then when I see something that's coming across from your side, then and it's in my lanes, then I'll be like, okay, I'll take a peek at it. Otherwise, it's like, no, right? So you have an aperture that's huge, right? You look at all things. We look at a couple things.
Yep. Now we do in terms of industry. I guess the flip side of the geography thing is you can look a bit more widely in your lane, geographically speaking. We probably miss great deals in Austin because we don't consider that to be in the Southeast.
Right. No, fair enough.
Yeah.
Fair.
Yeah.
Fair. And then I think the other thing is we can syndicate very quickly, right? And so there's a group of folks that if I'm doing something, I can send it out to them to say, hey, y'all want to throw your checks in too? And, I work with an attorney who will put an LLC together, and we'll quickly throw our money into that LLC, and that LLC will invest. So we can move quickly there. But that said, also the check sizes tend to be in that pre-seed seed from us. If there are 4 or 5 of us coming in at 25 grand a piece, you get $125,000 where it can have much bigger scale. Right? Your checks can be much more sizable.
Yeah, potentially. It's interesting you mentioned the speed of syndication. So that's interesting. We move as fast as we can for an angel group, which is not terrible. I mean, faster than a lot of VCs, but still, I can imagine oftentimes for entrepreneurs, ridiculously slowly. I get that. You can move faster than that. But it's interesting specifically on the syndication. It does take us a long time often to syndicate because all of the people we syndicate with are other angel groups who move at a similar pace, and that can take a long time. Whereas if you can syndicate with a smaller group of individuals, all of whom can make an investment decision pretty quickly, that does speed things up a lot, especially at those earlier stages. So that's a really interesting observation.
You're spot on with
not
the
really thought about.
geography. I mean, you guys are limited to the Southeast. It's by charter, right? I don't care where the deal is. I mean, I did a deal out of Portland, Oregon this past year, right? I did.
But do you get on a plane then and go see them and spend time with those entrepreneurs? You're willing and happy to do that?
Yeah. I did it. That was where I was at the beginning of the week. I was actually back in my old stomping grounds of Lafayette, Louisiana, because I have 2 portfolio companies that are hopefully going to be able to, because the state has redone their SSBCI, their state small business credit initiative dollars from Treasury.
Mm-hmm.
And so there's an opportunity for them there. So yeah, I mean, I'll go visit with them. I'll go to, do stuff like that with them. So absolutely.
Okay, got it. Yeah, I mean, I think most individuals don't want to do that for the most part. So I'm impressed and slightly envious of you that you do want to do that and can do that, because I know there's talented entrepreneurs I don't get to see because of the geography that we limit ourselves to.
Yeah, and I mean, with all your chapters all over the place, I think like the person I see on the road the most is Charlie. Like that's the one that he's in a car coming to the PD chapter of Venture South, which is like there's 3 of us, I think. Right. It's a joke. Maybe there's 10 members, but there's 3 of us. Right. And so poor Charlie, I mean, you guys are always on the road visiting your chapters, and it's similar, right? You visit the chapters. I'm visiting my portfolio companies.
Yeah. Right. I mean, you want to be in person with whoever your customer or, stakeholders are. You need to see them in person. Otherwise, this is not as much fun.
Correct.
Yeah. Got it. What's the biggest regret you have so far about investing in early stage companies, if anything?
I think it's the shots on goal I didn't take, right?
Interesting. Yeah.
Look, once I invest, I'm in. And if the company goes toes up, it goes toes up, right? And then you deal with it. You work with your accounting firm and your law firm to
Take the write-off.
sort that out, right? Okay.
Yeah.
Right. It's not getting into something that I thought maybe, and then I didn't. And then it's like right now, Paul, we were talking, I'm going to Nashville to go to a healthcare conference called VITS. And a lot of companies come there to seek investment, right? And so right now I'm having to decline a bunch of meetings through the Vive app because just for this quarter, we're not deploying any capital into anything other than our existing companies. And so we're having to tell them no. It kills me, right? I'm an entrepreneur too, right? It kills me that I'm like looking at these great companies that you'd be like, I'd love to sit down with you. I just don't have the bandwidth right now. And we're not deploying capital into anything other than our portfolio companies.
Yeah.
You'll do a couple, 3 new ones this year, but
okay. It's good of you to be transparent to those entrepreneurs that you're not deploying capital. That's something that a lot of investors don't do very well. And that can be very frustrating for everybody if they don't. So thank you for doing that.
Yeah, no worries. I've got a question for you. Yeah. Are we at Venture South seeing more deals coming into the angel network that in different time period would have not been coming into us? I mean, it seems that I saw this terrible pitch book graphic that showed the number of new VC funds that are being formed are like on fell off a cliff and are down below 2018 levels. So I'm just trying to see like what kind of deals. It seems we're seeing more mature deals coming our way because we have maybe some capital to deploy as we wouldn't see that in the past. I don't know.
I think it is accurate to say there are more later stage companies that are finding it very hard to raise later rounds of funding that then have to go back to earlier sources and come to us. And we're not really a great fit because they're not startups anymore, or they're raising $8 million and that doesn't really fit with what we can deploy. So we are getting a lot of that as later stage funds aren't as active. There's a limitless number of people trying to raise money all the time. So that hasn't really changed in 10 years. There's a lot of people out there, more than we could possibly say yes to if we had, 10 times the capacity that we've got at Venture South. And so that baseline supply demand thing hasn't really changed. We can always find a couple of interesting entrepreneurs to invest in every month or two, which is all that we really have the capacity to deal with. So that's good for us, just for consistency. But it is interesting to see which pieces of the capital stack are particularly challenging at any given time. And I would say that next round after us has become a lot harder. And therefore, we're seeing a lot more of those companies come back to us reluctantly because we're not the right answer for them, probably. So they realize that, but they've got to go somewhere for the money. So they try. Yeah,
I would agree with that. That's why right now we're not doing anything new in Q1. We're having companies come back to us and they're like, can you please help us? I've got one company that's had a bridge open for 18 months, and we're just trying to get to that last 250K in that bridge. And they're going to go Series A, hopefully in 2025, if we can wrap this up, when we wrap this up. But if they're not startup anymore, you know?
Right. There's definitely, yeah, we've seen a lot of companies that are sort of 4-ish years old. The time between series, I don't know if you've seen that chart from Carter, I think it is, that it just is taking, on average 3 to 6 months longer to get to the next round than it used to. And that's another indication of the same kind of phenomenon.
Yeah, it was, I looked at that pitch book graphic and I was just like, okay, now it's making a lot of sense when you see amount of capital being deployed, number of new VC funds being raised. I think there was a third in this series that they had, and it was cliff. It's an absolute cliff.
Well, the interesting thing is there was a spike beforehand, right? In the 20 to 22 period, there's a lot of new entrants into the VC market who have now gone away again, for various good or bad reasons. But it does seem to have overshot the decline back to below the 2018 to 20 kind of period. So that is potentially unexpectedly painful.
Yeah, I agree. And I think, during that period, I think I don't think people realize that some of these VC funds, they don't go out and raise 200 million pure cash from everybody, right? It's not like 200 million commitments. It's like a portion of that's a commitment, and then they can go get cheap capital in the marketplace to close the rest of the fund with cheap capital, right? And during the period we're talking about, it's inexpensive capital out there, right? And so you can raise a fund and have a good bit of it in cash and commitments from your LP, and then you can raise a good bit of that out in the public markets to supplement the rest, right? And so it's no longer the case. And so I think that's what you're seeing. I don't know. What are your thoughts? I mean, do we see about, like, I love going to, we're about to go to the annual conference. So I hope you're not like telling stuff you're going to report at the annual conference, but I mean, it seems to me we're hoping for a bounce at some point in time.
Yeah, I think there potentially are some signs that we're starting to get that bounce back. People who've been in the market for a long time are deploying more money now than they were a year ago. There are some new entrants around. Some of these programs you mentioned, the SSBCI program, some of those things are helping a bit in the gaps. They're not all quite as successful as we would hope, but they're starting to deploy some money too. So I think there are some signs of life and maybe a renewed optimism given, the political and regulatory changes that are going on, maybe. But I do think we are seeing some signs of life. One interesting development recently is the complete absence of exits has lessened. So there are some companies transacting now. We mentioned a couple in the show already. I think there were 5 triangle companies in the last 8 weeks that have been acquired, suggesting that things are starting to unblock on the exit side, and that has positive ramifications to the whole ecosystem if those exits come back. So
I know I recycle my capital, like, for the biospatial, it wasn't a lot of money, but it at least gives me a little bit. Without putting it back into portfolio companies, I'm not doing any new co-investing, right? It's like, it's recycled capital.
Well, I mean, it's important to go in those companies somehow. Yeah. People do need the exits to keep the momentum going, for sure. Well, good. I enjoyed the conversation. Good that we get to explore some of these things. Thanks for taking the time to do that, and good luck on your travels around all the entrepreneurs that you're going to be visiting.
Well, I appreciate Paul being asked. And then a little plug is I'll make sure that this will go on our Robinson Ventures radio. And then I teach an entrepreneurial finance class at Coker University. So I'm going to make this a must listen to for the students here coming up this spring.
Good. I'll keep a look on our podcast numbers then for a surprising blip around the university.
All 10 of those students hopefully will start.
I will see that in the numbers. Yeah, I'll see that.
Okay. Brilliant. Thank you, Paul.
Well, thank you. Take care.
Thank you for listening. Visit us at ventureinthesouth.com for a complete list of previous and future shows.